Okay.
Yeah, I think it will be better. Yeah.
Okay.
Yeah.
Hey guys, just need to check. I think we should be live, right? It should be live across Facebook, Facebook, YouTube, and Telegram. Just let me check because it's our first time going live today, right? Yeah, first time going live today across all the different markets. So I just need to check, make sure everything's working well. Okay, make sure everything's working well. Let me go live. Okay. All right, everything's working well. Anyway, guys, welcome to the live webinar session. All right, anyway, welcome to the live webinar session from Vantage Markets. This time we're going to talk for this week is our usual weekly market wrap. Be touching on the important news and the market events. Right, for those of you guys who are here for the first time, feel free to send your comments or questions that you have directly whether you are on YouTube, Facebook, or Telegram. Right, feel free to send it through. Right, we do our best to answer them, right? And Angie here, Angelina, will do our best to answer you too, right? Today's session, right? if we encounter any hiccups along the way, do let us know too, right? Or how we can maybe tweak the presentation a bit because it's our first time hosting it via Restream. All right, guys. Now, anyway, before we begin, one of the key things that we need to touch on is the disclaimer of a disclaimer. Remember that trading CFDs is dangerous. Nothing. This webinar is purely educational nature, so nothing in this webinar should be construed as investment or trading advice. So please, do your own due diligence before you begin. Okay. Now, moving on from here. Few of the key things that we want to touch on today. Right. Firstly, I'll just be showing you really quickly who will be presenting the webinar for you today. Meet the team. Right. After that, we'll zoom in into some of the important news events, followed by the US and Asia, US market news, followed by the Asia Pacific news, and then if you have requests, for any particular setups they want us to look at, right, send it in the comment section. We take a look at it, right. Otherwise, Angie has some pretty good setups she has identified for the day and rather for the week, right, and she would share it with you guys. All right, feel free to send the comments. Right, I know it's a little bit hard to since this is our first time using it, but don't be afraid to send it through. We literally have another monitor open here, just keeping track of the questions. All right, now let's move on. Let's move on really quickly to the team, right? So as part of Everest Fortune Group, we are the finalists for 2019-2020 for Best FX and Best Equity Research, certified fintech firm, and usually work with the institutions on telling them where the markets are heading. But we have a special partnership with Vantage where we are bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. In today's webinar, what we're going to focus on is really the key market, what you should take note of for the upcoming week, both from a fundamental perspective and from a technical perspective. Okay, I can see. All right, Yose, nice to see you. Andre, nice to see you. SU, I'm not sure. Probably short form for something, right? But you're from Germany. Hey, nice to see you too. Right, nice. Thanks for tuning in, guys. It's gonna be a fun session today, right? Just continue send your requests through. We do our best to look at them, right? I forgot to open trading view. Yeah, we do our best to look at them later. Okay. Anyway, hey, Harabe. Did I pronounce the name correctly? Harabe or something, right? Yeah, nice how you guys are tuned in. All right, so yeah, this is a team that we're taking you through today, right? Today for me, there's me, Desmond Leong, but of course, Harina. All right, that would have been my second guess. All right, and then of course, we have Angelina, who's a market technician here with us. She specializes, is pretty strong in technicals and fundamentals, so she's going to give you guys a balanced view on the market, not just from a technical perspective, but what you can expect from a news perspective, especially with all this stuff going around, Ukraine war, oil prices, gold prices, all this stuff, right? She's going to give you a good balanced perspective on it. All right. You have questions, like I said, don't hesitate to just send them through. It's pretty fun, if you guys can finally see each other talking, right? Previously in our go-to-webinar sessions, you can never really see each other's messages. So yeah, now it's a pretty nice touch to it, right? And all right, let's move on to the important news of the week. I'm gonna pass the time on to our dear Angie, right? Remember, if you have questions, just send them through, right? She'll do her best to take a look at them, right? And yes, I only hire not I only hire beautiful ladies. They're all beautiful. All right. Yeah, Angie will take you through today's. Oh, shucks, yeah, drop something. Yeah, Angie will take you through today's session. All right, Angie, over to you.
Hi, hey, I'm Andre. Nice. Thanks for your compliment. I hope. Okay, so for the session, right? I wanna share for both. Yeah, I'm a bit nervous. It's the first time we're streaming on so many platforms. So if I have hiccups here and there, I mean, it's my first time on three different platforms. Don't mind me. So I'm going to share perspective from the serious traders and not so serious traders. I'm going to try and put things in a way that is easier to understand. I know fundamentals can get hard. Oh, that's when he got nervous. Yeah. I mean, it's his first time on such a big platform too. So yeah, so yeah, I'm going to share from the serious and non-serious perspective. I'm trying to put things easier and more structured so that it's easier for you all to get a bigger picture. If you guys have any questions, or if you guys want me to slow down um to cover something more in detail, do post in the chat box. I will be happy to answer you. And I know if you guys have been trading recently, there's a lot of fundamentally driven breakouts, or some trades will actually perform not in alignment with TA. So it's a very volatile market right here. Hi, Abu Bakar. Is that Abu Bakar? Yeah, hello, nice to see you. Okay, it's nice to see everybody trading from all around the world. It's a nice community we have out there. So, right now, so we will first start off with the very important global news that's driving the markets right now. Let me see. Okay, so firstly is if you guys have been seeing, I think the entire market is trying to short Aussie pairs right now, because I think there was a similar to there was a fixed sort of double top on from the TA's perspective on Aussie pairs, and also oh, the camera's too high. Oh, is this better, guys? It's the
Because
first.
the logo is blocking you out.
Oh,
I
okay.
realize, so it's quite funny.
Okay,
Right.
sorry guys. It's not a very photogenic angle, but I shall just continue. So for Aussie pairs, right? I don't know if you guys know, like Aussie and Kiwi. They are two Australia and New Zealand. They are two very big exporters of commodities. So despite what's going on in the world around us, we and the whole market's trying to short Aussie pairs. We are actually seeing it rally and consolidating sideways. So TA is driving it down, but FA is actually trying to sponsor a further sort of rally on the pair. So if you guys have been trading on any of these pairs, you'll notice that it is not as accurate as it does not play according to TA for quite some time. So this is because that the commodities in the two countries are, so the unemployment rates are a healthy level right now. It's recovering from previous. And secondly, is because of the looser monetary policy that the government is for, trying to recover the economy from the state that it was in pre-COVID, right? So right now, I believe that from most people's perspective, it might be a short. We are due for a short divergence spotted on RSI, and also prices are experiencing pressure at a certain resistance level, but yet FA is actually driving it much up. And with gold being on a rally right now, right? Especially with there's a lot of gold mines in Australia, New Zealand. So we will be seeing a bit more of a bullish upside to Aussie after the short pullback. So this is what we're expecting for Aussie pairs, guys. If you're trading those pairs, do be careful. Try and find buy-ins rather than shorting it, right? So the second one is actually Euro. Euro. So we were seeing sort of a stalemate situation with the negotiations between Ukraine and Russia for last week, and more of a more peaceful outlook from the market's perspective. But with the new talks and new fresh invasions of Russia into Ukraine, we are actually seeing that potentially the tensions are actually on the rise again, which is why we might find that euro, pound together with euro, um, the entire geographical location, there it's gonna be more of a weaker currency bias towards that side. So if you're trading on any of the exotic pairs or euro, pound, do look for more of a downtrend rather than an uptrend, right? So that is that. And then for oil, we are seeing that after the Biden's announcement of the new releases, there is a very sharp dip, especially on Friday. If you guys traded that, that's great. But in my own perspective, we will still be seeing oil being on a rise, especially since the war talks are still ongoing now and we're experiencing new tensions in the environment. So, in terms of oil, we're expecting more upside. Okay, something interesting from the Asia side of things is that Korea's 10-year treasury yields actually rose to 3 point something percent. So if you guys are actually observing the Asian markets, South Korea is actually a very fast developing economy since a few years back. And it's actually not a healthy sign that the yields are very high, which means that investors are seeing that there's much risk in the markets right now. And if you guys are observing bond yields in US, the 2-year bond yields actually are higher, came to a higher level than a higher yield increase than 10-year bond yields. This is usually an economic sign of a market crash. I mean, this is in theory that sign, but we are still looking out in the markets. So if you're trading any of the stocks or any of the indices, I would say do be careful. A bearish turn, looking for a bearish downside is better than looking to long US 30, Nasdaq. I think it's a better, higher probability than you trying to long the market in the circumstances right now. Go to Webinar Live is not on anymore. We are trying this new platform, Harina. So I think it's pretty cute. I hope you like it. Yeah, sorry. Sorry, me, the tech. Yeah. Okay, so um, now we're covering on market overview. So is it not very convenient to sign? Is it convenient to sign on here? Like, what do you guys prefer? Do let us know. Like, we are open to feedbacks. That is great. This one you can see from more platforms like Facebook, YouTube, Telegram. So I think it offers like more audience, the to be able to watch us live. Yeah. Mm-hmm. Okay, so let me continue. In terms of market overview, we are actually seeing a bit more of a bullish upside compared to this morning. This morning is more of a mixed market sort of review. DJI, major indices, S&P 500, Nasdaq, they are all experiencing small increment. Compared to in the morning, I'm talking about Singapore time for us, right? VIX was actually in negatives in the morning, which is saying that investors are generally on the fence and observing the markets at the beginning of the week. But something to note is that bond yields are still increasing 2.417. It's very, very high. I would expect more upside from this because of the war news, and also government is trying to um, contain inflation, but we do not know in midst of war and the very volatile markets right now how markets will perform. So I would expect higher yield prices, right? So that is that. Do you guys have any questions? So for Asia Pacific markets, we are seeing many of the China indices actually on the rise. This is mostly because of how the government trying to follow through with their trying to follow through with their plans of helping larger cap companies So if you guys were observing the news from China, they are saying that they are trying to help the economy recover from Evergrande crisis last week, but there was a sharp dip because there was no action following their announcement. But following this week, last end of last week, there was some positive news towards that, which is why we are seeing actually a growth in most of the China indices. Investors are finding new confidence in the larger cap China stocks, especially the tech ones like Didi. Alibaba has experienced a bit of a growth, but more of Pinduoduo. If you guys are looking on that, I would still stay on the fence on that one because as I said, the markets are very volatile right now. If you are looking at stocks, right, um, do make sure you look into more of commodities related stocks like oil producing stocks, mining companies. I feel that in general, those industries are on the safe side compared to tech stocks these days. And even bigger large cap stocks like Tesla, they are actually on the higher side right now. I mean, you can still invest in it, but just know that tech stocks in these days, FANGs, in times of war, they are considered more volatile stocks. So if you are trading on those, do be careful. Yep. Any comment on the 10-year and 2-year yield spread? As I mentioned just now, we are seeing that the 2-year yields are actually higher than 10-year. So logically, if I simplify it, it means that investors are saying that the potential of defaults for 10-year bond yields are higher than comparison to potential of defaults of 2-year bond yields are higher in comparison to 10-year bond yields. So this means that in the near term, they are seeing more volatility and higher risk compared to 10-year, which is why a lot of the economists in the markets, if you're looking at it, are calling for a big crash in the markets. And because of investor confidence, regardless of in reality how the economy is doing right now, we are seeing very good numbers, by the way, from NFP, lower unemployment rates. We are seeing that the inflation markets are trying to, Fed is trying to declare that they're going to price in about seven rate hikes this year, each of 25 BPS, right? So we are potentially seeing a healthier US economy, but market-wise, stock-wise, it does not usually say exactly that how the economy is. What I meant is that the markets might not be performing well, but economy might be still doing okay. So yeah, that is the 10-year and 2-year yield spread. Hope it answers your question. It's just economic phenomenon that when they are in a weird sort of like when the 2-year yields are higher than 10-year yields, it's sort of signaling to us that there might be a crash. But whether it really occurs or not might not happen. Okay, Tianmu, I hope we answer your question. Okay. Yep, I'm a bit nervous too today. There's more people than usual. Okay, so what will benefit traders, I feel personally, is currency strength and currency review. So right now we'll go through each currency, and from this you can also find good investment, good trading opportunities. If you're very good at fundamentals, right? It's easier to find currency pairs and to align your fundamental analysis together with your TA. Okay, so for DXY, what we're expecting, as I mentioned just now, Fed has declared that, and the market I think has priced in for about 7 rate hikes this year, about one each meeting, right? And they have just recently priced in 25 BPS, and if we are seeing we are seeing higher than expected CPI or PPI results along the way, there will be chances that they will be increasing it by 50 BPS on any of the meetings. So that will be dependent on the data release each month or each quarter, depending on what the market expects or what the forecast is and what is the actual data. So this is what we will be looking out for the upcoming few weeks. Okay, 7 rate hikes, inflation. Okay, so in general, experts are actually saying that US markets are recovering quite well for their GDP estimates are actually um it's actually lowered for to 2.8. So there's this term that is called stagflation, which means that the market is having higher inflation but lower GDP estimates. So in particular, this is what the US economy is experiencing right now. I still believe that the economy is doing better than expected because NFP results, unemployment rates are actually at a healthy level. Except for the GDP estimates, I think in general we are still expecting more bullishness from DXY. Another reason is because yen, franc, dollar, they are all considered safe haven in times of global crisis like the Ukraine-Russia war, right? But right now we know that yen is becoming weaker because of the monetary policies and the problems that the economy is facing after the COVID circumstances. So it as a safe haven, people are losing confidence in it, and franc, because euro it's in the eurozone, there will be potential risk to invest in it as well, so people are placing more confidence with DXY, which is why we're seeing for dollar yen, for DXY, it's on the very, very strong bullish side. If you guys are trading on any of these pairs, I know it's at a very high overbought level, but do be careful if you're looking to short it, because fundamentals or any piece of news from the Fed might just drive the currency pairs up. So if you're looking at any of the dollar pairs like Aussie dollar, Kiwi dollar, do be careful of it's harder from FA perspective to be confident in the direction bias. So that is that for DXY. Okay, for gold wise, it's actually very straightforward. Gold is an inflation hedged metal, right? And also because when there's crisis, money becomes sort of like worth lesser than we are expecting. So people will go to DXY, go not dollar, US dollar or gold. So if there's no war, actually by right gold and dollar, they are inversely related, which means one goes up, one goes down. But because there's a war going on, right, we are actually seeing both are more on the bullish side right now. So I believe gold is actually experiencing a short rally, and because of inflation, because of the recent talks not going so well in the European side, we are seeing expecting from fundamentals perspective for gold to go up. So our direction bias is weak bullish. Okay, as I mentioned for Aussie, our experts are saying that it's mixed to weak bearish. This is because people are expecting the China markets to be affecting Australian dollar, especially after they declare over a lockdown in China. But personally, in my opinion, I'm thinking that from FA's perspective, it's gonna be more bullish because despite the lockdown, the markets in China are recovering because with government intervention over Evergrande. So China markets are doing relatively well. Aussie and Kiwi are also very closely related pairs. If you look at the charts on TradingView, their shapes are very similar. So, and they are retaining their dovish outlook at the March meeting. Unemployment rates are at a healthy level. Inflation rate is general stable and healthy level. So the economy in general, I think, is in a good position. So personally, I'm thinking that it's a more bullish turn compared to the rest of the currencies, but we shall see, because I think most of the people in the market are more leaning towards a bearish downside to Aussie dollar. So trade at your own risk, guys. Any questions? If you have questions, do post in the chat box. I'll try to leave more time for live TA analysis. Okay. So for yen pairs, as I mentioned, it's more of a bearish turn on yen because of their loose policy stance and their economy in general are not doing well. Inflation plus unemployment rate high and oil prices are high, driving inflation even higher. they are actually at a debate with their easy policy stance. So it's driving the economy into a very confused state. We are not looking at a very healthy yen pair. So if you're looking at, for example, if you're looking at dollar yen, it's more of a very strong FA bullish turn. But if there's potential or good setups on a shorter term for dollar yen, do go for it. I mean, this is just FA. TA plays a role in trading as well. So trade at your own risk. But for yen, it's gonna be quite weak for the week to come, and also maybe for next week as well. Okay, Kiwi is usually in alignment with Aussie, as I mentioned. Um, so their policies in general are expected to be dovish as well. We are expecting 3 hikes to the current hiking cycle for forecast. But personally, in general, I think Kiwi is also on the upside. So for Kiwi, Aussie, do trade with care. If you're doing short-term trades for the pullback, it's fine. But long-term, we're still seeing an overall bullish trend. Okay, and euro dollar, we are just gonna see it being more of a weak bullish, because the bullish bias is formed by the European Central Bank's decisions. So it might be a very short bullish trend, but because it's right smack in the middle of where the crisis is occurring, and also because of the sanctions which will affect its businesses, I'm leaning more towards bearish on this pair. I think it's hovering in the middle. I was checking the TA on the charts. It's more on the middle, so I would stay away from trading euro for today. But you guys, any of you guys trading euro? Let me know. I mean, what do you guys trade on? I am, you know, seeing a lot of people. Hi, Andre. I like your name. So yeah, what pairs are you currently trading on? Not today. Great. Don't trade euro today. I'm not trading on the pair personally as well. It's in the middle and consolidating sideways, so I don't really like it. But you guys, any good setups you would like me to look at, or do you guys just want me to go through like my own finds for today? Anyone can post. Pound yen. Okay, we can go through pound yen after. I think I still have about 3-4 slides. Then we can do about half an hour of live analysis. Just that's a great plan. Any one of you longing on gold? I think gold is a good long, by the way. Just saying. But I don't know if it hit TP already or not. Your yen short since Friday. As you are very brave and you're very fast. I mean, like, yeah, gold and silver long. Yes, personally, I'm a long for gold and silver as well. Yeah. Anyone looking to long UJ? Just curious. It's at very close to all-time high, but there's still more upside. SU. Okay. We can look at all the pairs that's in the comment section. If you guys want to look at any based on who posts first, I will go through TA based on Eurocat long. Okay. We will look at it later. So Frank, very fast. Yep, stalemate in Russia-Ukraine negotiations. Report attacks from the former lead to a consolidative period for the safe havens. Right, safe haven Frank. Okay, so that is that. And then lastly is oil. Oil actually shorted all the way since Biden's release, or Biden said that they're gonna release more reserves, right? And then oil shorted all the way. Anyone of you guys shorted UK oil? UK oil shorted so nicely. So, but anyways, yeah, oil, we will be seeing that it's gonna be a short-term bearish bias, but in the long run, I still think that it might be long, because my personal view is that the war is gonna last for a longer period of time, and because of that, countries might want to stock on it, and the demand will actually drive the oil prices up. So in general, if you're looking for a long run sort of investments, you can look at oil producing companies, but maybe wait for the pullback before investing in. And it will be a long-term sort of investment. It won't be like a short-term take profit after a few months. It will be a general long perspective investment. If you guys are looking for just a few months to get profits, then perhaps not that great. Okay, so that is that. So we can go into good setups right now. Can you guys see my screen? This is the first time. Okay, so this is actually we will look at pound yen. Right now, I am not liking this chart that much. Okay. Okay, so if I'm on the daily, if I'm drawing a extension, we actually reach close to the 127.2, right? And it has shorted off here already. So let me clean this up. It has bounced off the key level, right? If you guys are long-term traders, I would expect it to be actually more of a short pullback towards this area, okay? And so that key level is where the potential short came from. Let me do right, and okay, so this is the area of resistance which prices actually tested and bounced off on from the daily, right? So if you guys are a swing trader, you probably expect it to go down to at least this level, which is the 23.6. And I think this is a safer level because firstly, this is a support and price is actually has hovered around here. So here would have been potentially a great support level. So if I'm moving down, you can see that price is actually hovering around here. We'll see more bearish downside towards this area of support here. If price tests this again, I think it'll be great to actually play a small bounce towards this area of support. Okay, but because this is on the charted on the daily, it will take a bit of a longer period of time to play out. So I would probably wait for price to go closer to this area again, probably as close to as the edge of here for a short. Either that, or if you are scalpers, you like to take TP within a few hours, you wait for long towards this area of resistance. Something about sorry. So what do you guys think? So if you are right now looking for a trade, prices are actually hovering in the middle, right? I will actually wait for confirmation. So if it's a real bullish trend, right, I would expect prices to reach this level of resistance again. But if I were to trade myself, personally, I'll wait for price to actually test this level as high as possible from this area of resistance to actually go for a short, either for towards this area of support when it tests there, right? Or I will play a very long term towards this level. And it will be very, very long term. It won't be a short. So this is pound yen. So these are the levels that I'll be looking at. This one probably, and then if it breaks this, I'll probably play along towards the swing high. And if it starts to fall, I'll be expecting a trend reversal first to my support, resistance turn support. And if it breaks this level, this is a key level, right? It'll probably be short towards my either swing low or this next level of resistance on the larger time frame. So this is pound yen. Do you guys have any questions? Ahmad, this is your pair. Do you have any question with regards to this? Is it a bit confusing? Are you a short-term or long-term trader? Just curious. Are you a long or short? Okay. We can do. Oh, you're a swing trader. Oh, that's great. Perfect. I should have asked. I'm sorry. I should have asked before. But yeah, this is the levels that I will personally look out for. I hope this helps. Okay. Fibonacci, and then this is the support level. A very I think it to play it safe, play to the edge of this support area. Though there's potential for it to hit this level too, but usually I like to play like closer so that it's safer. So yep, this is the few levels you can look for. Shorter it since pound, since Friday took some profit. Good for you, SU. Okay. Okay, so next is actually Euro Yen from SU. Let's look at your brilliant shot together. Whoa, it's a nice one. This is a great setup. Okay, okay. So you probably have shorted from here, right? Let me see. So you would probably have waited for the 1 2 right, and here is the 1 6 200% projection. If I'm drawing another expansion minus okay, or minus 60. Okay, so it can either be this, but it tested both already. I'm just gonna leave this both here. Right, if you have shorted, you probably have played to the 23 point, which is here. SU, this is a great setup, but I don't know if you have taken profit already. Let me check if there's potential for more downside. So price actually in the middle right now. We have already tested the 23.6. I think it's worth holding. If you're at break even, it's worth holding because there is potential for it to reach the support level, right? At here is probably 38.2. Oh, it's higher than, so if I think potentially for a safe TP, this would have been a safe one because it's a support level, it's a resistance turn support, swing high turn support, right? So if you're already at BE, potentially it can come down to this level and you can hold for a better higher profit. So there's also a descending trend line I see here, which is supporting the short. If any of you guys want to go in for further shorts too, this is not a high probability setup, by the way, because the short 23% already occur. But you can wait for retest at this trend line for it to go down again. So if it's at this area, potentially it will be great. As you took partial today, good for you, good for you. Great, great, great. Okay, so pound yen, pound euro yen, Sanders long on gold and silver. Let me see. Let gold and silver as well. Anyone traded gold and silver? No? Okay, so I spotted this long. I hope you guys longed it as well, right? This is a nice support level, by the way. Wait, let me drag this here. Okay, so this is not this is a nice support level. I would drag it so that you guys can see 4 hour, right? Even on the 4 hour or higher time frame, it's actually forming a descending trend line here. There's a short, but it's not confirmed. But this is a very strong support, which is why there was a bounce. If you guys had played this, probably had played to here. Or if you guys did a reverse Nike tick, don't know if you guys did a reverse Nike tick. This is not a reverse Nike tick. Okay, but this is a support level which prices tend to bounce off. It has broken, if you guys are scalpers, it has broken out of the descending trend line, right? Here I'm seeing potential for it to retest this support level And we will watch for this for confirmation whether it will bounce or not. Okay. But to me, it's better to look for long entries rather than short entries. So for gold, it's a very scary pair to trade on because we see a breakout here, right? And it's potential for long. But if you draw a line from here, wait, where was the line that I drew? Okay, I think it's over already. It played out. But I will look for long entries, and from fundamentals perspective, we are actually resting on a support. But again, I would say this is not a high probability setup because there's no confirmation, right? And yeah, this is just not very nice. Let me see 1.6. Price has reacted off that. Okay, so price test of this again 23.2%. So it actually, so I would actually watch this level, right? This support, this is in between, by the way. Not very nice. I'll actually watch this level for further bullish continuation from here all the way up to here, right? And if there's potential for bounce, can probably play about a $10 move, but set a very tight stop loss because if it dips, it might touch it. But my bias is that at this support level, there's a high potential that it might bounce. Give it a lot of breathing space, by the way. So these are the levels you guys might want to watch for. This is the second swing high resistance touch from the descending trend line, right? So yeah. Can you please show the numbers? Oh, I'm sorry. Let me try. Is this better? Is this better for you? I was just zooming out so that you guys can see the overall trend. I hope this is better. Is this better as you? I think can go in for a long. Let me see if there's divergence. Okay, there's no divergence spotted on this. You guys must enter at your own risk if you are. But this potentially there can be at least a bounce from, oh, it bounced up from this level. So this is the numbers. As you can you see the numbers properly? Let me see how I can zoom this. Is this better? Say them as well. Okay, my support level is potentially my support level is potentially at about 1926.5. It's currently already starting to play out. My first resistance at 1933.5, around there. Andre, you laugh. Can you see? I go to my chart. That's how I know. Okay, cool. Thanks, Andre. Okay, as you no problem. I think potentially it can go to here. It's a very nice resistance level. You might want to TP earlier so that it doesn't suddenly, retest. But I think this is okay. Better? Yeah. Okay. I guess more charts, less of my face. It's fine. Okay. 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 Harana request for Aussie dollar. Okay, so let's look for great setups again. Okay, guys, remember like what I said about Aussie dollar, it's gonna consolidate sideways for a while. I actually shorted this small bit here, but the Nike tick, unfortunately, in my opinion, might have played out already and it's gonna be more bullish. I think why it hovers around is because the whole market is trying to short this, right? But then fundamentals are driving it out. So the moral of story is that fundamentals are quite important, guys. Okay. This is close to a double top. I think a lot of people in the market short this because they think this potentially can close in a double top. How to confirm whether it's double top is if it breaks this line, right? If it breaks from this area, then it's a double top. So we won't consider this a double top yet. Yet. I say yet because it might still break and short all the way. We wouldn't know. Okay, and right, this is 1.2. The um that was the famous Nike take, right? So 100%, this is actually a very, very nice trade if fundamentals aren't so annoying, right? Okay, let me see. It's probably minus 27. Yeah, this is actually a very pretty trade. If you guys caught it right smack at the top, and you closed like just a bit like at the swing low here from here. So imagine if you guys spotted this, for example, right? You guys, if it was here a few days ago and you spotted it at here and you drew this out from your Fibonacci's, potentially, usually people would want to play to the 23.6, right? Which is here. But if you want a safe trade, why not play to the swing low? Set a very tight stop loss. And your sell entry at here, you press enter, sell entry. Okay, and then let's see what happens. So this is your TP. And this is your stop loss. Okay, so potentially, where's my replay? So potentially what would have happened is here. See, pretty. This is an awesome trade. So what the moral of the story is, it might not reserve, but it might not reserve. It might not reverse, but if you set a stop loss at a swing low, which is close to a 23.6%, it's still a very, very nice, very decent trade. And it's a decent, close to quite a decent number of pips, I would say. So this is how you use Fibonacci's to find potential good setups. Do you guys have any questions? Anyone use this style of trading as well? But unfortunately, this has already played out. Personally, I'm seeing more potential for bullish run because of fundamentals. So if you're looking to short it again, do be careful. Even though prices are consolidating sideways, it might not play out. I'm not saying that it definitely will not, but this is a case where fundamentals and technicals are in conflict. But however, we are seeing divergence here, right? So there's a potential for it to short. If you're looking to short the markets, short this. So do look out after this whether this market high has completed if you really want to go in for a short. I personally I think there's potential for a small pullback, but not all the way a trend reversal pattern. Okay, guys, any questions as to how to find this kind of setups? Yeah, guys, because these days any piece of news can drive TA nuts. So you guys might want to set a tight stop loss and make sure you look at fundamentals before you go in a trade. Okay. Okay. Any other charts that you guys want me to look at? Eurocat. Oh, I missed out Eurocat for SU. Okay, we can look at Eurocat. Okay. Let's look at the daily. Okay, so there is a very strong descending trend line, right? Not exactly the strongest, but definitely there is a descending trend here. There's no three touches, by the way. I won't call this three touches. Okay, but on 4-hourly, it seems okay. There's another trend line forming here. It was a trend line breakout here. So my personal bias is that there's potential for a bounce on this. Who's the SU? Are you along on this as well? I think the bearish trend is there. Okay, so personally, I feel that if it goes a bit lower, there's potential for a bounce to occur. Okay, maybe we're at this level where previously price test this and bounce up. But I wouldn't say this is a very safe chart to trade on, right? Because firstly, most euro pairs are consolidating in the middle. They are not on any resting on any larger time frame chart patterns or trend lines. The trend line bounce off would have been here to short it here, but it is, and even for this as a support, right? It's not a very great one because it cuts this pattern by this ugly pattern by so much. So I would stay out of euro pairs these days. But if you guys find a great setup, do go ahead. My personal bias is that it might bounce a small bounce towards this area, right? But it's not the best setup. Like it's not 100% confirmed. So trade at your own risk. Yeah. I wouldn't call this like this is a support level, but it's because of the bearish trend on euro itself. I wouldn't call for it to definitely bounce to the resistance level. If you guys get what I mean. Cat sell bot euro cat. Potentially it's a support level, but it's not the strongest support level. Usually if I don't find a high probability setup, I wouldn't trade on this. Yeah. But if it works for you, then by all means do try. Yeah, cat yen. Maybe more dollar cat is there's a setup on dollar cat, I believe. Yeah. I was looking at a bounce, but I think it occurred. Okay, so dollar. So how I find setup is that for dollar, it's more of a bullish move, right? And cat is related to oil, so oil is more on the downside. So if cat is weak, right, and then dollar is strong, most probably the fundamentals perspective, it's a bullish trend. So from my perspective, that's how I found it. Okay, and if you're looking at it from a TA's perspective, firstly is that you're looking at market structure, right? There is a overdue sort of let me see. Let me move this aside. Okay. Okay, so from my perspective, there is a overdue. If I draw here, 1.2. Where's my right? Oh, sorry guys, it's the wrong way. Okay, so there's an overdue 127.2, right? And then if you're doing a projection, it's actually the 1.6 or 1.2 as well, close to the 1.2. Right, so it's close, which is why it's hovering around here. Okay, and the second thing is that we can do an expansion, which is here, going down and negative, right? So it's this area we're expecting a reaction from. Of course, market already went through it, but if we're looking for divergence, okay, there's not I don't see divergence. but definitely I'm looking for reaction at least to my 23 point, at least to the swing high, which is here, and potentially it can reach this level of resistance as well. So if it will depend on the time frame and time horizon you are trading on. If say if price at this level here, right, the bullish run on DXY on dollar is gone, I would close everything, or I will set to BE and let it run, or close half. But if the bullish game is still strong, I might potentially put BE and like hold it all the way until this, because the weakness of cat is gonna last for some time, right? And dollar is gonna be running as long as the war efforts are there, as long as there's inflation, as long as there's tensions going on, people are gonna go into dollar, which means that the bullish run is gonna be there. Do you think cat will hike interest rates? That is very hard to say actually. There's mixed reviews online. Hopefully, if you're trading on this pair, yeah, you would probably want to watch for the results. I cannot say yes or no for sure, yes or no, because anything can happen. Like they can just suddenly, because of the war efforts, suddenly not decide not to, right? So yeah. Cat is weak. Yen is weak. Maybe, I don't know, but I think it's easier to find like very obvious just personally direction bias. We can look at this, but see, it's a very hard call because it's more of like up down sort of manner, right? But if you're looking at dollar cat from fundamentals perspective, it's easier to look at it. It's just my opinion, like how I find better, more solid trades. um Pound cat, pound is weaker too, I would say. Cat is weaker, but we can look at it from a daily's perspective. Oh, there's potential for a setup, right? From feed levels, guys. Regardless of how like in alignment these feed levels are, how pretty the trade is, you guys have to watch out for the news just in case things, and set your own stop loss just in case like it doesn't play out. Even the best trade will have at least 10% of it not going to your way. So the best way is to, it's the probability thing. Best way is to practice good trade management. Oh, potentially this is a good, but this is for swing traders. Okay, so the danger of using Fibonacci confluences for swing traders is you have to give it a lot of breathing space, and news can drive it to the next level of Fibonacci confluences. That's based on experience. But this is a nice resistance. This is a nice area of support. Potentially it's a good buy if you're on the hourly. Price is actually testing this for a while. So for exotic pairs like this, right, it might take some time before it plays out, but I do see divergence here. So it is a trend potential for bounce and trend reversal, but it's going to take some time for it to play out, right? And also there's divergence here. So yeah, it's a decent setup, but more for swing. And also if you guys are trading on this pair, go in with the best entries, and also be wary of news from Europe, which, and cat, which might so if say the if cat strengthens, right, it might be a more bearish turn because pound is getting weaker. So yeah. Any questions, guys? This is a nice setup. So I have 2 more minutes to if I can rush through a chart, like if you guys can send a last one in. If not, I can just try and answer your questions. Anyone? Okay, so cat will hike interest rates. I think they will personally, but it's hard to say. Send like that's for me personally, but it's hard to say because like these days it's so hard to guarantee. We all think that it's going to be stalemate for very long for Russia and Ukraine, and then suddenly they start the invasions again. So it's hard to say. Okay, anyone has any other questions? If not, I'll be ending the stream soon. 1 more minute. So anyways, if you guys want to try on your own trading, right, you can open a demo account on Vantage Markets. They do have very great guidance there too. Everyone has their own style. I'm more of a TA focused trader. I use FA to find setups, then I follow through them, or I look through the calendars for events that I want to look into or stay out of. If you are not sure, like you can actually think of going on the sidelines for. Yeah, thanks Andre. Thank you guys. Uh thank you guys so much. Thanks for hanging around. Um, let me know how the trades actually play out next week. And let me know if there's anything else like I can help you guys with. Thanks, Phillips. Thanks so much for coming. Okay, so I have 1 more minute, and thanks, Josh. Is it Josh or Antonio? I like your name. Thank you guys all for staying and looking at my support and resistance. I really appreciate it. I hope you find me a bit entertaining. Okay, but I hope like there's something beneficial for y'all to take back, and it's a great time. See you guys next time. Bye bye.